What's up, investors? Iggy the Investing Iguana here with an exclusive scoop on SingPost's bold new vision for the future. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with a total of 370,000 reads. In this video, I'll be breaking down the logistics giant's recently announced strategic reorganization and growth plans straight from the mouth of their CEO. We're talking game-changing moves that could unlock massive value for shareholders and position SingPost as a true powerhouse in the Asia-Pacific logistics arena. So buckle up, because this is one ride you won't want to miss. Imagine a world where your parcels are delivered with lightning speed and pinpoint accuracy, no matter where you are on the globe. That's the kind of future SingPost is aiming for, and they've got a roadmap to get there. Intrigued? Let's dive in. First things first, let's talk about the strategic review they've been working on. SingPost brought in the big guns, Merrill Lynch, BofA Securities, to help them figure out how to enhance shareholder returns and ensure that the company is valued appropriately. Smart move, right? Now, here's where things get really interesting. SingPost is going to reorganize itself into 3 separate business units: Singapore, Australia, and International. Each unit will have the freedom to operate in its own market and build on its core strengths. This is a brilliant move because it allows each unit to focus on what it does best without being bogged down by the others. Let's start by diving into SingPost's plans for their Singapore unit. As we all know, the e-commerce market in Singapore has been booming, with more and more people embracing the convenience of online shopping. This presents a massive opportunity for SingPost to cement their position as the top dog in the local delivery game. They're not just talking the talk either. SingPost has a solid strategy in place to dominate the last-mile delivery segment, which is crucial for providing a seamless e-commerce experience. With their extensive network of delivery hubs, fleet of vehicles, and army of dedicated couriers, they're well equipped to handle the surging demand for fast and reliable deliveries. But that's not all. SingPost is also investing in cutting-edge technology and automation to streamline their operations and enhance efficiency. We're talking about things like automated sorting systems, route optimization algorithms, and even exploring the potential of drone deliveries in the future. By staying ahead of the curve, they're positioning themselves as the go-to choice for businesses and consumers alike. Moving on to the Australia unit, SingPost has set their sights on becoming one of the top 5 logistics companies in the country. Now, this is no small feat, considering the fierce competition in the Australian market. But SingPost has a secret weapon up their sleeve: their expertise in 4PL, fourth-party logistics, and 3PL, third-party logistics, solutions. For those unfamiliar with these terms, 4PL refers to an advanced logistics model where a single provider manages the entire supply chain process, from sourcing to delivery. Meanwhile, 3PL involves outsourcing specific logistics functions, such as transportation or warehousing, to a third-party provider. By leveraging their strengths in these areas, SingPost can offer comprehensive and tailored solutions to businesses of all sizes, giving them a competitive edge in the Australian market. But wait, there's more. SingPost isn't just relying on their existing capabilities. They're actively exploring strategic partnerships, mergers, and acquisitions to accelerate their growth and establish an independent valuation benchmark. Talk about ambition. By joining forces with the right players or acquiring complementary businesses, SingPost can quickly expand their reach, enhance their service offerings, and solidify their position as a major logistics player in Australia. Now, let's talk about SingPost's international unit, which is gearing up to tackle the exciting world of cross-border e-commerce. As online shopping continues to transcend borders, there's a growing demand for seamless and efficient international delivery solutions. And SingPost is positioning itself to be a major player in this space. Their strategy revolves around an asset-light model and their cutting-edge 4PL platform called Arrive. For those unfamiliar with the term, a 4PL provider essentially acts as a single point of contact, managing and coordinating the entire supply chain process across multiple logistics partners. This approach allows SingPost to offer comprehensive cross-border solutions without the need for extensive physical assets in every market. The Arrive platform, which was launched just last year, is designed to enhance the customer experience, strengthen partnerships, and achieve operational excellence in international connectivity. Imagine being able to track your package from the moment it leaves the seller's warehouse until it arrives at your doorstep, no matter where in the world you are. That's the kind of seamless experience Arrive aims to provide. But SingPost isn't stopping there. They're also actively exploring opportunities to expand their e-commerce supply chain network in key geographies. This means identifying strategic locations to establish or expand their logistics hubs, ensuring efficient and reliable cross-border operations. Some of the regions they're eyeing include Singapore, Hong Kong, and Europe. By having a strong presence in these major markets, SingPost can better serve their international customers, whether they're businesses looking to expand their reach or individual consumers seeking access to global products. Imagine being able to order a product from a seller in Europe and having it delivered to your doorstep in Singapore within a matter of days, with complete transparency and hassle-free customs clearance. That's the kind of seamless experience SingPost is striving to provide through their international unit. Of course, navigating the complexities of cross-border logistics is no easy feat, but with their asset-light model, cutting-edge technology, and strategic partnerships, SingPost is well-positioned to tackle the challenges head-on and emerge as a leader in the global e-commerce logistics space. All right, now let's dive into the nitty-gritty of SingPost's capital management strategy. This is where things get really interesting, folks. First off, SingPost is taking a proactive approach to managing their capital across all three business units. The goal? To ensure that each unit is generating a healthy spread above their cost of capital. In other words, they want to make sure that their investments are generating returns that outpace their borrowing costs and other expenses. But how do they plan to achieve this? Well, SingPost has already identified a list of non-core assets and businesses that they can monetize or sell off to recycle that capital into more profitable ventures. We're talking about things like selected properties and assets in their international portfolio that may not be contributing significantly to their core operations. By divesting these non-essential assets, SingPost can free up valuable capital that can then be reinvested into their growth initiatives or used to pay down debt. It's a smart move that allows them to streamline their operations and focus on the areas that are driving the most value. And here's where it gets really exciting. The proceeds from these divestments won't just be used for debt reduction and growth investments. SingPost is also planning to return some of that value directly to shareholders through dividends or share buybacks. Speaking of dividends, SingPost is adopting a new dividend policy that's sure to make income investors sit up and take notice. Starting from the financial year 2024/2025, they'll be paying out between 30% to 50% of their underlying net profit as dividends. Now, this may seem like a more conservative approach compared to their previous payout ratios, but it's actually a well-balanced strategy. By retaining a portion of their profits, SingPost can reinvest that capital into fueling their growth plans and transformation initiatives. At the same time, they're still committed to rewarding shareholders with a sustainable and attractive dividend stream. This dividend policy takes into account the company's capital needs while also ensuring that shareholders receive their fair share of the profits. It's a win-win situation that demonstrates SingPost's commitment to both growth and shareholder value creation. Overall, SingPost's capital management strategy is a testament to their forward-thinking approach. By actively managing their capital, monetizing non-core assets, and adopting a balanced dividend policy, they're positioning themselves for long-term success while keeping shareholders happy along the way. Phew, that's a lot of information to digest. But let me break it down for you in simple terms. SingPost is essentially restructuring its business to become more focused and efficient. By separating its operations into three distinct units, each one can concentrate on its strengths and target markets without being held back by the others. The Singapore unit will dominate the local e-commerce delivery scene, the Australia unit will become a major logistics player down under, and the international unit will facilitate cross-border e-commerce through its cutting-edge platform and expanded network. At the same time, SingPost is taking a proactive approach to capital management. They're identifying non-core assets that can be sold off to generate cash, which will be used to reduce debt, fund growth initiatives, and reward shareholders through dividends. Overall, this strategic plan is a bold move by SingPost to position itself as a leading logistics powerhouse in the Asia-Pacific region. By streamlining its operations, pursuing growth opportunities, and optimizing its capital structure, the company is setting itself up for long-term success in the rapidly evolving e-commerce landscape. As an investor, I'm excited to see how these strategies unfold over the next 3 years. SingPost is clearly thinking big and taking decisive action to stay ahead of the curve. If they can execute this plan effectively, it could translate into significant returns for shareholders like us. Of course, there are always risks and challenges involved in any major strategic shift. But from what I can see, SingPost has a solid plan in place and the resources to make it happen. In summary, SingPost's strategic reorganization is a bold move that could unlock significant value for shareholders in the long run. While 2024 may still be a transition year, if the company can deliver on their promises, we could see the stock price start to reflect their true potential as a logistics powerhouse in the Asia-Pacific region. There you have it, folks, SingPost's ambitious blueprint for transforming itself into a logistics juggernaut, straight from the horse's mouth. From reorganizing into 3 focused business units to exploring strategic partnerships and acquisitions, it's clear that the company is leaving no stone unturned in its quest for growth and shareholder value creation. Now, I want to hear from you. What do you think about SingPost's bold new vision? Are you excited about the potential upside, or do you have some concerns? Drop your thoughts in the comments below, and let's get a lively discussion going. And of course, if you found this video insightful, do me a solid and smash that like button. It really helps out the channel. And if you haven't already, hit that subscribe button and ring the bell to stay up to date on all the latest investing news and analysis from your favorite iguana. Until next time, keep those scales shiny and those portfolios diversified. Peace out, investors.